I guarantee you 100% the real estate market is going to crash. Well, that's obvious. The real estate market at some point is always going to crash. But in this video, I'm going to explain to you the 3 main reasons why I see a real estate market crash coming very soon. I'm going to back my claims up with actual data as well as some insider information that you may not have. And I want to preface this by saying I'm not a doom and gloomer. I have a real estate brokerage and my business will get hurt by this real estate recession. But at the end of the day, I'm not blind to the data. I want to position myself for a bull market and a bear market in real estate because I know I can make money with either of them. It's all about how you position yourself. I think a bear market is coming, so I want to sell more real estate, buy less real estate, and save up as much cash as possible. I may look like a disheveled mess, and that's true, because these are the 3 reasons why the real estate market is crashing. Here we go. Number 1. Buyers. The orange line is 2024. That's the data we care about. And guys, what does this look like? Well, this looks a lot lower than 2021 and 2022. This is homes sold. Simply put, there are less homes selling. Why? Because there are less buyers. Now, buyers can be made up of really 2 groups. Retail buyers, people who just want to buy a house to live in, and the annoying investors who are buying all the real estate and driving prices up. Like us. Well, in 2020 and 2021, investors were buying like crazy because interest rates were 3%. And that was driving up the amount of homes sold. Here in Dallas, Texas, during that time, investors were buying anywhere from like 30 to 50% of every home for sale. And that's why prices went crazy. But that number has dropped substantially. Investors are gone. I mean, maybe they're still hiding in the shadows, lurking, looking for the right prey, but guys, they're not existent right now. And it's not just your mom and pop investor. It's also the big funds. The data's a little hard to come by, but let me give you a few points to back up my claim. First is a insider point. What am I seeing in the market? Well, I have a real estate brokerage and we sell deals to investors. We were selling about a deal a day to investors. I'm talking ugly homes, lots, and even small multifamily. Now, it's not good. We're selling less deals. But not only that, the buyers, these investors are saying, hey, I want to buy it. It's just that I need it cheaper. And why do they need it cheaper? Well, let me show you the data. But first, to back up my claim a little bit more, hedge funds are blocking withdrawals. Yeah, some of the biggest hedge funds, like check this out, Blackstone blocked investor withdrawal. What the hell, ad? Blackstone blocked investor withdrawals from $71 billion REIT. Investors put money into real estate investment trusts, and then big companies like Blackstone will go invest their money for these investors. But then the investors are like, hey, I want my money back. I don't really trust the real estate market right now. I need my cash. And these REITs are like, no. We're going to keep your money. They're blocking withdrawals. So what is that telling me? That they're not getting new investors to put money into the REIT, and most investors want their money back. So guys, investor purchases are down, but it's not just investor purchases. Retail purchases are down too. And what is that causing? Yes, that is causing the amount of homes sold to go down, but there's a bigger problem. Think about how a real estate market works, or how any market works. How do markets work? You have buyers and sellers, but it's all about supply and demand. Just because the amount of homes sold is going down, that doesn't mean that we're in a real estate recession. It doesn't even mean that prices will go down. Because think about it, home prices only go down when there's more supply and less demand. So if there's just less homes being sold, that doesn't tell you a big enough picture. We need to look at more data. Maybe there's just less supply and less demand, which just causes a flat market. But that's not the case. There is less demand. I'm telling you, investors are buying less. And also retail buyers are buying less. And what is that causing? That is causing price drops to skyrocket at the highest point in the last many years. On average, 7% of all homes across the US are dropping their price. I see this skyrocketing to 10% by this time next year. Let's see if I'm right. Hold me to that prediction. Price drops are going up. Days on market is going up. Homes are taking longer to sell, but that's causing the months of supply to go up. This is the most important data point, everybody. This is how many months of supply does the real estate market have? The more months of supply, that means the more backlog backlog of inventory we have. Guys, we have a lot of inventory based off of the low demand. We have nearly 15 months of supply before winter. If this gets upwards of 20, real estate recession. And guys, this is over the US. You take some cities and it gets really scary. Don't believe me? Look at Austin, Texas. 25 months of supply. Real estate recession. It will take 25 months of no new inventory, no new people selling their house to eat through the current supply. That is not good. There are no buyers for Austin, Texas. But Max, there must be buyers for Nashville, right? Everyone loves Nashville, Tennessee. Oh, wait, there's not. But Max, there must be buyers for Miami, 30 months of supply for Miami, Florida? DeSantis, what are you doing? Stop wasting your time running for president. Get some bigger pumps and fix your real estate market. What is going on? I can tell you what's going on. Buyers are gone. Investors are gone. I have proven you that. And also retail buyers are gone. Guys, rates are at close to 8%. Yeah, they tick down closer to 7, but they're too expensive and homeowners cannot afford real estate right now. The prices, this is the crazy part. Welcome to an inflationary monetary policy. Prices are at all-time highs. So you might be thinking, the real estate market's great. Prices are at all-time highs. No, one, inflation, but two, the real estate market is very location dependent. There are a lot of areas, especially back east, market is still booming. But I'm telling you guys, in these southern states, it is crashing and the crash is starting. Investors are gone and the retail buyers cannot afford real estate at current rates. And if you tell me rates will come down and prices will go back up, you're lying. You're lying. If rates come down, real estate crash. I'll explain that in another video. Okay, so 3 reasons why the real estate market is crashing. Number 1, buyers are gone. Number 2, sellers. The reason why the real estate market has not crashed yet is because sellers aren't desperate to sell. Buyers are not desperate to buy. We know that, but sellers are not desperate to sell. But that is starting to change. I showed you with the data, the months of supply is going up. Sellers are increasingly becoming more desperate. But what is going to break the camel's back? Take a bat to the camp. Okay, that's really effed up. Is unemployment. Most sellers are sitting on 2, 3, 4% interest rates and they are not motivated to sell. We've heard it. The golden handcuff. Supply is locked, but supply is only locked until you are forced to sell. And I think we're gonna see that force come in the form of unemployment. Here we are on the Fed website. This is the Federal Reserve website. And you can see this was the pandemic. I can't say that word because I'll get demonetized and shadow banned. This was that. And then it was super low, right? But guys, look, it's ticking up. This may not look like much, but I'm telling you, this is a lot. Oh, you guys probably can't see because of my picture. Here you go. This is not good. This is ticking up. And between us, these numbers are a big fat lie. The government manipulates and lies about their numbers. You have the CPI, which is the inflation data, huge scam, and the unemployment data is even a bigger lie. Unemployment is not 4.1%. It's probably double that. The way they count it is a huge sham. But they can't even hide it. The data is going up and it's getting really, really bad. People cannot find jobs. Anecdotal, the word anecdotal data. I graduated from college a few years ago with that useless degree back there. Woohoo, MBA, yay. And I also own a portfolio of student housing. I talk to college students all the time and I'm telling you, nobody can find work right now. Nobody my age and nobody in college. The job, the economy, it sucks right now. And it's only getting worse. They can't hide it. They can't lie about it. The market, the economy, it sucks. But the stock market's great. My asset prices are up. Real estate's doing great. Yeah, inflation, guys. They're just printing money. They're buying bonds. That will soon change. You can't keep the Ponzi scheme going forever. So unemployment is ticking up. And at some point, guys, unemployment is going to break the camel's back and is going to force these sellers to sell. Banks are trying everything to stop foreclosures, to just delay them and delay them and delay them. But I feel like this is starting to change. It's just a gut instinct I have. Hey, what, are you gonna trust this guy's gut? Maybe, maybe not, but I'm just telling you what I see. So if supply starts to get unlocked from sellers, and there are also not just retail sellers because of unemployment, we also have other things, which I'm gonna make full videos on, like the Airbnb bubble, for example. That's going to cause investors to sell like crazy. Remember all these investors that bought those homes in 2020, 2021? I told you 30 to 50% of investors buying homes, right? Every single freaking house in Dallas, Texas, and all these other cities. Well, these people will be forced to sell too. If their Airbnbs stop Airbnb-ing, or their traveling nurse housing stops getting traveling nurses, or their pad splits, or all their fancy exit strategies stop working, these investors are going to be forced to sell. sell, and that's going to unlock a huge amount of supply. I can't even stress how many Airbnbs there are in small little certain cities. And again, real estate is priced on the margin. It is very local. So if you get an influx of Airbnbs selling off in one city, that can actually cause a real estate crash in that city, which could cause a real estate crash in that metroplex, which could cause a real estate crash in that state. It's dominoes, guys. It doesn't take much to crash the real estate market. It's very, very sensitive, especially when it's been strung along for what? 16 years now, since 2008. And that's really the third reason I have, guys. The two most important reasons are buyers and sellers. That's what makes a market. That's what I talked about in this video. But the third reason, honestly, guys, it's just freaking time. It's just time to have a recession. Recessions are not bad things. They're natural phenomenons. Imagine a forest. Forest fires are actually a good thing. You burn all the bad stuff and then you can regrow new, have even better life come out of that fire. And that's the same thing with the recession. It's time. It's been 16 years of living in a fugazi economy. With the way interest rates are right now, and I have my whole predictions on where I think interest rates are going down soon, not gonna help the real estate market. So make sure to subscribe to see that video. It's just time. And what I wanna talk about briefly before we end this video is how you should position yourself. Whether you're a real estate investor, a wholesaler, a lender, a realtor. Well, if you're a realtor, ooh, that's the only thing. Ooh. Learn to wholesale, learn to invest, learn to lend. If we get a boom economy, okay, you realtor, you're gonna be okay. And everyone else, you're gonna be okay. You're all gonna make a lot of cash. But if we get a bad economy, y'all are gonna lose a lot of cash. And what you should hopefully do is invest. If you're an investor, just start buying. If you're a wholesaler, start buying the properties you're wholesaling. If you're a lender, start being a private money partner and actually partner on these deals. So lend and then actually get equity in these deals. And if you're a realtor, try buying some of these properties. If we get a recession, that's a good thing. Accumulate assets and hold on to them for another decade at least, and then sell them at the highs. But if we get a boom economy, then position yourself to just start earning a lot of cash. I don't see that boom economy coming. I see the bad economy. And that's why me personally, I'm trying to save as much money as possible to be able to buy as many assets as possible and position myself so that I have an influx of deals coming to me and I don't have to go and search for those deals. That's how I'm positioning. And I hope you can emulate that. I want the best for you. So the real estate market is crashing for really two main reasons. Sellers are starting to unlock their supply slowly, but more importantly, guys, buyers are just not there. And it's just freaking time that we see a recession. It's a good thing. Embrace it. Don't be scared about it. And then you'll be able to make a lot of money. I hope this video is helpful. I'm gonna make a lot more real estate update videos. Are you excited for the crash? I don't really know if I am. My business is gonna go to shit. But I'm super excited to buy some real estate. Bye, everyone.